Welcome to Weekly View on Markets. This Friday, Nifty closed at 18,696 with a gain of 0.99%. I had maintained my view that market is in a bull trend and we will see higher levels. So Nifty has closed at all-time high, crossing previous high of 18,600 on this Friday. And Bank Nifty closed with a gain of 0.28% at 43,103. Mid-cap index also gained around 3%. Small cap index gained about 2.34%. The broader markets in represented by mid-cap and small cap indices outperformed during this week. They gained around 3% and 2.3% respectively. India VIX has remained steady, indicating that the fear factor in the market has subsided, and India VIX is at 13.45, indicating there is comfortable feeling in the market and fear has receded in the market, which augurs well for further positive sentiment in the markets. Let us look at different sectors, how they have performed during this week. Nifty Realty was a leader, followed by media and metals. All the sectors ended in green. They were led by realty, media, metals, commodities, FMCG, and information technology. Other all sectors closed in positive with a gain of 1 to 2%. There was no sector which was in the red, which indicates the overall bullish sentiment in the market. Now let us look at Nifty chart. This is the long-term chart. That is the monthly chart of Nifty. I have taken a long-term chart of Nifty because there is a interesting development that is happening in the market, and it is going to give us a guidance on investing opportunity that is available for the investors to benefit from the markets. That is why I have chosen the monthly chart. So if we look at this chart, I have drawn a flag. The flag starts from the low which was there during the COVID crash, that is around 7,600 of Nifty level, and the pole is formed, the bullish trend after the COVID crash has lasted till 29/10/2021. This whole formation is now looking like a pole of the flag, and the last 1.5 year correction after the bullish bull run post COVID period, the correction due to rising global inflation and Ukraine war. That entire thing is looking like the growth of the flag, kind of consolidation. Now the market has again come up above previous high of 18,600. This whole structure looks like a bullish flag, and this flag has a huge target of more than 26,000 for Nifty. Whether this target will be achieved in next within 2 years, the time will tell us. But I have looked at various parameters, also the charts of mid cap and small cap indices, that is broader markets, the overall participation of different sectors. These all indicate technically that we are in for a big bull run in coming months and in coming years. So there is a big target for Nifty of Nifty touching 26,000 in next 2 years. from the present level of around 18,600. Let us look at the Nifty mid-cap chart. This is again a monthly chart of Nifty mid-cap index. We see similar kind of formation that we have seen on Nifty index, on Nifty mid-cap index also. So this also indicates that the same sentiment is portrayed on mid-cap index chart of Nifty. Let us look at small cap index. This is a small cap index chart, Nifty small cap index chart. Here we can see this was the highest level of 9,600 on Nifty small cap index during 2018. Now the index has crossed this level and has closed at 10079 last week. Structurally, this also indicates that there is a good support at around 9,600 700 level. As long as small cap index remains above this level, I have a bullish view on this. The overall sentiment in the markets looks very positive. There is a bullish sentiment. So technically, different sectorial charts and index chart, they all look in quite a bullish mode, and the chart structure looks very healthy. So let us look at some of the fundamentals, whether these fundamentals are supporting the chart structure and what is likely to happen based on the fundamentals. Domestic auto sales for the month of November 22 was announced last week. So they are up almost by around 20%. However, the exports were down for different automobile companies, which is quite understood due to the global weakness in economies of many countries due to the inflation and after COVID effects. So Indian domestic market is very buoyant, and the domestic automobile sales are going up. Passenger car sales is up around 20% year on year. Commercial vehicle sales were up by around 40% year on year. Commercial vehicles are used for transport, logistics, and industrial activities. Also, tractors are used for agricultural activities. So, commercial sales is up by 40%, which is a very good leading indicator of overall economic activity that is going to pick up in coming months. Two-wheeler sales were up by around 4%. The reason is that there is a large base for two-wheelers. Hero Motocorp is selling more than 3.5 lakh two-wheelers. On such a large base, 4% growth is not a bad number. And one more thing, it indicates that rural economy is yet to pick up because demand, the two-wheeler demand generally comes from the rural market. So the slow growth in two-wheeler sales indicates that rural demand is yet to pick up. Now, with the harvesting season getting over, we may see some uptick in two-wheeler sales in the coming months. RBI has reported that foreign reserves have gone up from around 543 billion to 550 billion, which is a very stable condition for RBI. So, what has resulted in increase in RBI forex reserves is a continuous flow of FII, FPI, and foreign remittances into Indian markets. GDP growth for last quarter, that is Q2 quarter, has come at 6.3. Compared to last year, the growth was around 13%. These percentage-wise figures look distorted because in 2020, the GDP growth was almost nil due to lockdown. And last year, we have seen 13% growth. On a percentage basis, it looks quite big. And this time, it looks 6.3. But uh, s- figures figure of 6.3 is not bad, as we are on track to meet target of 6.8 to 7% growth for the full year. That was the previous RBI estimate. So GDP growth is also coming in line. There is no problem, which is again indicated by many other macroeconomic factors. The growth in transport and tourism, which was heavily affected during lockdown and COVID, has started picking up. The growth has come at 14.7%. Fiscal deficit for the year, for the half year, has been 45% of budget estimate for the full year. We have consumed 45.6% of the budget. So another remaining 6 months is there. This indicates that the overall fiscal deficit target of 6.4 for the full year can be met. So this is a very good indicator for macroeconomic stability. GST collections for November has come at 1.46 lakh crores. This is nine consecutive months where GST collections have remained above 1.4 lakh crores per month. Good GST collections indicate that industrial activity and economic activity is quite stable, and it is picking up after COVID. Government tax revenue has grown at 20.8% for last 3 months, indicates robust pickup in economic activity. PMI manufacturing index for November 22 has come at 55.7, which is off from 55.3 in October. So PMI index above 55 indicates that industrial activity, manufacturing activity is expanding and it is picking up well. This is corroborated by diesel consumption, which is up by 27.6%. Similarly, power consumption, that is electricity consumption in industry, is up by 14.7%. These all figures match with PMI manufacturing index, which is showing a peak. So the overall economic activity and industrial activity is picking up. These factors are again helped by low oil prices after touching more than 100, dollars per barrel. Oil prices have started coming down and they are continuously trading below $90 per barrel. Last week it is at 86.94 barrel after touching a low of 81 barrels during the week. So I had earlier mentioned that oil below $90 is very good for Indian economy, and this low oil price is good for oil marketing companies. We have seen the prices of oil marketing company stocks going up. I expect that if the oil prices remain below $90 per barrel, the quarterly results of oil companies for December quarter will be much better, and people can look at accumulating some of the fundamentally good oil company stocks, oil sector stocks for next 6 months to 1 year view. USD INR, again the dollar index is also come down from 83 to 81.36. Dollar index after touching a high of 114 is now come down at 106. Benchmark bond yields are stable between 7.25 to 7.5 in that range for last 4 5 months. Inflation is at 6.8 after touching a peak of 7.9%. RBI is going to have next MPC meeting on 7 to 9 December 22. Since the inflation has peaked out in India and it has started coming down, the RBI may go soft on rate hike. This is what market is expecting. So if happens, we may see further rally in banks and financial stocks that will also support the overall market. Macroeconomic stability combined with pickup in economic activity as indicated by the data given above provides a bullish outlook for the equity markets. And also we have looked at the technical structure of charts. The technical view also points to upside in the market, which is well supported by the macroeconomic fundamentals. And many companies are expected to announce good results on the back of demand picking up in the economy. The earnings of the companies, the profits of the companies are likely to grow and their business is likely to pick up. So, considering all this, I maintain a very bullish view on Indian markets despite global headwinds and day-to-day volatility will be there in the market. The investor should not get too much worried about the day-to-day volatility. They should invest for keeping a view of 2 to 3 years at least. And there is a very good chance for all the investors who benefit from the upside in the markets. So this is all for this week. If you like my video, please subscribe to the channel. You can share with your friends. You can give your comments. And if you have any questions, you can post your questions. I will reply. This is all for this week. We'll meet again next week. Thank you.